Mark, thank you for joining the One Road podcast.
Thank you.
This has been quite undertaking to come here to Singapore to get to see you. Lots been happening since I last saw you. Perhaps you could update everyone. I know you've told a few people already, but what are your plans?
Well, this is my very last day with Franklin Templeton, and today we're going to have a big party with all the staff in Singapore. Actually, last week we had another party in Hong Kong,
right?
And before that, another party here, which included people from all over the world. All the people that worked with me in the past have come, and it's quite amazing. It was really very gratifying. But now I embark on something entirely new,
right?
Because what I'm going to do is begin to research more intensely something that I've wanted to do for quite a long time that didn't have time, heading up the emerging markets group here at Templeton. But what I want to do is ESG work, environmental, social, governance work, and try to align that with the investment arena. In other words, how can we invest profitably while also having environmental, social, and governance standards that are very good. And the research we've done so far indicate that companies do perform very well with those standards. But more importantly, companies that are now embarking on improving those standards do even better. So what I want to do is establish a fund which will target those companies,
right?
So we can help them to improve the ESG standards of their company.
Would this be strictly emerging markets, or I'm assuming it has to involve developed markets as well to get that kind of exposure?
It would be emerging markets, and particularly frontier markets, because that's where a lot of work has to be done.
Right.
So it will be emerging and frontier.
Have you identified the criteria of what would qualify for a company that would meet your investment criteria, basically?
The criteria that you can talk about. For example, just if you look at the environmental standards, it can be anything like affecting global warming.
Right.
It could be pollution control. It could be water safety. It could be many, many things. So the list is endless.
Wow.
And of course, trying to meet all standards is not going to be easy. That would be the difficult component, because a lot of businessmen really are not concerned. They say, hey, this is not my job, it's the government's job. So we have to be an educator in many ways, go to these companies and say, look, there are investors who really care about this. And by the way, the impetus behind this is coming from clients, from particularly large institutional clients who are under tremendous pressure to bring their money to bear on these big questions that are facing mankind now.
Right.
So you'll find, particularly the big pension funds, saying, look, we want you to be investing in good corporate governance companies, good social standards, good environmental standards, and so forth. And most importantly is the G, the governance side. Because what we're finding is that those companies that pay attention to governance, i.e. proper treatment of shareholders, good disclosure, good investor relations, they tend to do better. And it's not surprising, because if they're satisfying the needs of investors, if they're answering the questions that investors have, chances are the investors are going to favor them more and buy their stock.
Right.
So that, I think, is probably going to be the most important component. And of course, if you can have good corporate governance, then you can bring in the social and environmental questions, because they are then open there to a dialogue.
How would you measure these kind of things? Like, I'd imagine one looks at financial statements, but then are you going to have to ask for all these things such as like carbon emissions and statistics of that nature to identify if this company is suitable for you?
Oh, definitely. We will look at those things. To give you an example, one of the investments we made was in China. Very interesting company, actually run by a woman. What she's been doing is importing waste carton paper from the United States. Immediately you say, wait a minute, waste paper, you're moving garbage from America to China. But what she does is then turns this into new boxes that can be used for exporters in China. But she pays great attention to the environment, because any of the wastewater, a lot of water is used in paper making. She treats all of this paper wastewater intensely, so that when she puts it back into the stream, it's clean. And the other interesting thing she did was that, with this waste paper comes a lot of wire, plastic, and other waste materials. What she did is compress them in a special process with resin to make garden furniture, which is quite attractive because you have all these different colors in the garden furniture. So this is a very good example of a company that is involved in very dirty business, but has transformed it into something that's very environmentally friendly. Their earnings growth has been roughly about 15% a year, which is very good, and they're running about a 20% profit margin. So they're doing very, very well. She wanted to do this because she realized that at the end of the day, the government would go after her if she'd put wastewater into the streams.
Right.
So she realized she had to be aware of that. But she also was aware of the fact that her American clients, she exports as well, would be concerned about this. But I think also it came from her personality as well.
One should be aware of when thinking about emerging markets.
Oh, there are two things, and this comes as a result of hard knocks that we've had, the mistakes we've made. I would say at the beginning, we made two mistakes. One, we focused, as you know, John Templeton was known as a value investor. And Berkshire Hathaway, its value investing is sort of the name of the game.
Right.
The problem we had was that we paid too much attention to the near-term numbers. Because we always said we want to go 5 years out to project, but we found it very, very difficult to do that. And it was because we lacked imagination. We didn't do enough work in forecasting what the management of the company was going to do. So we focused more and more on PE. Let's say you got a low PE stock, then it's a buy because it's a bargain. And that was a distortion in many ways of what value investing is about. Value investing really is about what are you going to see going forward.
Right.
In other words, you've got to find an exciting idea in a company that you expect to be growing, so that the PE today may be 30 times, which would be considered too high, but in 5 years it'll be 2 times because of the growth rate. So I would say that was one of the difficulties we had at the beginning, and so we paid too much attention to those low valuation numbers. The second, and aligned to this, the second error was not paying enough attention to the people behind the company, because we found through hard knocks that a company may look great on paper and the audit may look tremendous, but the management could be stealing from the company without you knowing it.
Right.
And the only way you can find that out is by looking at them very, very closely, looking at their background, looking at their history, looking at the relationships they have, and then coming to some assessment of how integral their business is to their own personality and their own personal desires.
Right, right.
So, and it can be a family company, it can be a corporation, whatever. If you're not paying attention to the people, you can get into real trouble. And I think that was an error that we made at the beginning that we learned over the years was very important.
Can you, in these somewhat controlled environments, truly benefit from a buy and hold perspective as opposed to maybe multi-year trend perspective?
If you're willing to hold for a long time, it's great. You'll make a lot of money. And you look at the emerging markets index, which doesn't necessarily reflect everything that's happening in the markets, but if you look at the index, since 1988, it's gone up by roughly 2,500%.
Sure.
Whereas the developed markets have gone up by about 900%. So obviously, if you had bought at the beginning and held, and maybe even dollar cost averaged over the years, you would have done very well. The problem is most people are not willing to wait that long, and they get scared when there's bear markets. But the studies that we've done have shown that over all this period, there have been bear markets, admittedly some dramatic bear markets, but they've been very short in duration. So you have 5 major bear markets over that period of time,
right,
where the market went down more than 30%. Mm-hmm. Most of them went down much further than that, by the way. But these periods are, on the average, about a year and a half, a little less than a year and a half.
Really?
Yes.
Over how long of a period?
Since 1988.
Okay.
You get these.
Right.
In fact, I have a chart which shows the bars of these bear markets. The bull markets last much longer.
Right.
And then if you look at the percentage change of the bull markets is far greater than the percentage change, the drop of the bear markets. Mm-hmm. So if you put this together, you begin to say, well, wait a minute, if you don't know what is going to happen to the market, nobody knows.
Right.
Aren't you better just to be dollar cost averaging? You'll get bull markets, you'll get bear markets, but the bear markets will not last long. Mm-hmm. And you'll be better off doing this dollar cost averaging. So that's the reason why I always tell people the world belongs to optimists.
Right.
Because the bull markets last longer, they go up more. Mm-hmm. So you're better off being in the market than not being out.
Sure.
Now, admittedly, let's take right now, we're near another peak in emerging markets. A lot of people say, look, we're headed for a bear market.
Yeah.
There'll be a market soon. But nobody knows. This could last another year, another 2 years.
Right.
Nobody knows. So are you better waiting, or is it better for you to say, okay, I'm going to start my dollar cost averaging now. I'm going to put $1,000 or $100 in the market every month for the next 5 years.
Right.
You're probably going to do very, very well, even if you're buying at the top of this bull market.
Right.
You know what I mean? We already had that. Don't forget, subprime crisis was a global phenomenon. It hit central banks. It hit everybody.
Right.
So we've had it. If you remember in 2000, the dot-com boom and bust, that was another period. I think there's a possibility that I call them psycho-currencies, the pseudo-currencies that you have, could be the next breaking point. Because the interesting thing is happening...
Can you elaborate a little bit more about that?
Well, you have the creation of not only Bitcoin, but many other
software
currencies.
money, basically software money is
exactly.
what I call it.
Software money, yes, exactly. When I hear from somebody that TSMC, Taiwan Semiconductor in Taiwan, is figuring into their budget the impact of these currencies these people that are creating these currencies buying chips.
Yeah.
Their demand has gone up. When you hear that, you know this is big. This is a big, big thing.
Right.
Now, what are they doing? They are creating money. They're creating liquidity.
Right.
Where's this liquidity going to go? It's going to go into the markets.
Right.
So this bull market could last a heck of a lot longer than we expect. Which is why I think emerging markets will probably go up another 20% from where we are now.
In
a very short period of time.
Right?
And the same thing with oil. A lot of people ask me what the oil price is going to be. I think it's going to go to 100.
Sure.
Because U.S. dollar is getting weaker, and you've got all these new currencies, new liquidity coming into the system, which is not controllable. It's very interesting when you think about it, because up to now, there's a lot of activity that's constrained by the financial system. Mm-hmm. If you want to do gaming, it's constrained by rules and regulations. If you want to sell drugs, it's constrained.
Right.
Money transfers are constrained. The U.S. Department of Treasury has whole teams of people trying to look at the transfers of money.
Yeah.
If you have these currencies that nobody can trace and nobody can look at where they came from, then you have an incredible boom among the people that are trading in many, many different commodities. And when they ask me about these cryptocurrencies, I often say, look, I don't like to talk about religion in public because it's absolutely based on faith. But the rejoinder to that, the proponents of these currencies can say, look, isn't the U.S. dollar that also? Don't you have faith based on...
Sure, but you could argue there's a little bit of a yield. There's a little bit of interest there. You know what I mean?
There's a yield in the cryptocurrencies, don't forget, because those people who are trading, one of the fallacies is that these cryptocurrencies with blockchain makes transfer of money cheap and easy.
Right.
No, it costs. There's a cost to that.
Okay.
At least 2 or 3% on each side.
Yep.
And in many cases, more than that. I know of one gentleman who's been trading in cryptocurrencies between Korea and China, Hong Kong. Mm-hmm. And he now has about $1 million in cash held up in a hotel room in Seoul.
In like software, basically, right?
No, cash.
Oh, because he's
Korean won.
transacted.
He's
okay.
transacted and he's converted it in Korea.
Right.
Now the question, how does he get it out? Of course, capital control is making it so he's got to ask everybody, can I use your bank account?
Oh, wow.
Or he's got to find somebody who has got to make payments in Korea.
Right.
He's importing things from Korea. And then, they'll transfer or they'll pay him in Hong Kong dollars in Hong Kong. But what is the cost? One gentleman said to him, look, I'll help you, but I want 20%.
Wow.
So you've got a tremendous trading system going that people are making money with. So very often people have been telling me, look, don't invest in the coins. Mm-hmm. Invest in the people who are trading the coins.
Interesting.
And they say it's like the gold rush in California.
Yeah.
The guys that made the money were the people selling the shovels. See, now, here comes the possibility of a crash.
Okay.
Let's assume that this continues, the growth of this, as more and more people jump on the bandwagon.
But its market cap is only like 800 billion right now, like around the size of Apple.
Exactly. That's what people say.
Right.
But I expect that there's probably more to that in terms of what's being generated. Mm-hmm. Very difficult to estimate, of course.
Right.
There's no central authority, but I think it's growing by leaps and bounds. The nemesis of all this will be a crackdown by governments.
They are already doing it.
They are doing it in Korea, in China.
Yep.
But there are many, many other countries around the world that are really allowing this to happen.
Exactly. That's why I think it's unsustainable unless governments start to implement their own crypto technology.
Yeah.
One issue, though, is that I've been looking into a few of the coins, and they discussed to me that there's no real auditing standards towards what's behind.
Actually, there's no one really monitoring.
Yeah.
No central authority.
Exactly.
It's the same thing with blockchain.
Yeah.
People go crazy about blockchain. This is another religion. Mm-hmm. They say this is a safe way to transfer money and everything. It's not safe because somebody can get into this chain and infect all members of the chain. Mm-hmm. This can be very dangerous. And by the way, this would be another source of crisis.
Right.
And it's not only the blockchain, but also the cloud. Mm-hmm. Because more and more institutions, individuals are putting their data on a cloud.
Right.
For example, I believe Amazon business in the cloud makes more money than their regular sales business.
Yeah.
If these clouds get infected and attacked, it can be a crisis. It can be a real problem. Mm. And this is something we've got to watch. And by the way, in the military area, this is also dangerous.
Yes.
Because, you can make mistakes. Mm-hmm. There can be, somebody getting a signal and they decide to push the button and we're all in deep trouble. So this is the kind of crisis that we think about. There's a very interesting book written by the former Secretary of Defense of the United States. Mm. And he mentioned the time when he was at his desk at the Department of Defense and the phone rang. Somebody said there's 6 missiles from Russia coming our way.
Right.
And he reached for the phone to call the president immediately. Then another message said, oh, sorry, somebody put a training tape on the system. This is the kind of thing that can happen.
Right.
Just with Hawaii.
Yeah.
Somebody pushes the wrong button. I mean, the reaction could have been missiles going towards North Korea.
Right.
And you have a world war. So this is, I think, something that is really frightening. So I think it's very important for all of us to question. Mm-hmm. When somebody says blockchain is the greatest thing since sliced bread, and they can't explain it to you because they say it's too complicated, watch out.
Right.
Because that's where you're going to get into trouble. The key movement is going to be a declining influence relative to the emerging countries, China and India in particular, but other countries like Brazil and Russia and so forth. The days when America was the single dominant country and where the Europeans were the single dominant colonial powers is over. That's really gone. And we're now in that process. Now, it doesn't mean that the U.S. will decline in their standard of living or Europeans will in the same way, but it means that other countries will be coming up in a much faster rate. They are already. The growth rate of emerging markets is double that of the developed countries. So that is going to be the big change. So that means that Americans and Europeans have to get used to the idea of being partners with these emerging countries and accepting them as important powers at the end of the day. And I think, frankly, the policies of Trump reflect this reality in many ways. Because what he's saying is that, look, the days of the U.S. protecting the world are over. We can't afford to do this anymore.
Right.
And the days of giving trade benefits to the poor countries is over.
Right.
We can't do that anymore. So it's sort of a sign of the times when, a president says things like that in the face of, the tremendous impact, positive impact that global trade has had, particularly on emerging countries. So I think that's really what we have to be aware of.